Hi everyone, I'm Connor, and this is What's Trending on YCharts. Every month we share with you the hottest stocks, funds, and econ data that people are searching for on YCharts so you can stay ahead of market trends and make smarter investment decisions. Our top stories from July include Shopify selling off as e-commerce sales slow down. We'll also look at short duration fixed income funds for this rising rate environment. And finally, the United States strategic oil reserves are down to record low levels. If you have any questions about how we gather this data, check out the description below. Don't forget to hit subscribe. And now let's see what's trending. Let's kick it off with the most popular stock pages on YCharts for the month of July. As is usually the case, a lot of US mega caps leading the way. We see Apple, Amazon, Tesla, and Microsoft. We also see, for the second month in a row, the price to book value for Berkshire Hathaway B shares, which is interesting. But we're going to dive into Meta and analyze some recent earnings data with 2 of their last 3 earnings releases missing estimates on EPS. So on this chart, we have Meta Platforms price in purple with those earnings release date flags. We also have quarterly actual EPS in orange and quarterly estimated EPS in blue. Back in late 2021, a very narrow beat for Meta actually caused their share price to lurch lower on negative guidance. And then at the end of 2021, that earnings miss sent the stock way lower. And despite a slight improvement in the first quarter of 2022, Meta has just missed its second of its last 3 EPS estimates, and now its share price is just above the lows from 2020, which were $149 per share. We're going to transition now into the hottest company pages on YCharts, those with the most month-over-month page view growth. We see a fair amount of tech names here, plus some communication services, industrials, and financials making the list. At the top, Snap Inc., Shopify, and BHP Group on the industrial side all stood out in July. Also interesting to see Taiwan Semiconductor on this list after an EPS and revenue beat back in July. But let's dig into Shopify as the e-commerce platform is facing significant headwinds this year. You can see on the chart that Shopify's share price peaked at $170 back in 2021, and now it's struggling to get back up to $40 per share. This comes as e-commerce sales growth has slowed down significantly, and the story is that Shopify made significant investments expecting that e-commerce sales growth to continue in a post-COVID environment, but now shoppers are returning to brick and mortar stores, and Shopify's share price is paying the price. Looking now at the most popular mutual fund and ETF pages on YCharts in July, we have a cohort of large passive equity ETFs like SPY, QQQ, VOO, and IVV, but also joining it on the active side, the ARK Innovation ETF. We also see QYLD, a covered call ETF tracking the NASDAQ 100, and then also AGG tracking US investment grade bonds. The story we're going to focus on, though, is XLE, the Energy Select Sector Spider. Here we're looking at a percent off high chart for XLE itself in purple, and then its top 3 holdings. Now, Exxon and Chevron make up a combined 45% of XLE's holdings, and with an additional 5% from ConocoPhillips, that's more than half of this ETF in just 3 companies. While energy is still one of the top sectors over the last year or so, its year-to-date performance is being heavily impacted by XOM and CVX. So as oil prices go, so go Exxon and Chevron, and so go the energy sector. Definitely something to keep watching going forward. Now looking at the hottest mutual fund and ETF pages, those with the highest month-over-month page view growth. Mostly broad equity on this list, but we are seeing some upticks in some more interesting mutual funds and ETFs, such as the Fidelity Contra Fund, also from Fidelity Select Semiconductor Mutual Fund, Wisdom Tree US Total Dividends, and the Global X MSCI Argentina ETF making our list. One that we're going to jump in today onto the fixed income side is the Lord Abbett Short Duration Income Fund. So on this chart, we have in the top that Lord Abbett Short Duration Fund in purple, and then the U.S. Ag, all investment grade U.S. bonds. And down below, we look at the U.S. 10-year Treasury rate, which is up sharply as Fed activity and future plans have been announced. But the message here is that short duration funds tend to outperform amid these rising rate environments. So depending on your view of Fed activity going forward, will they keep rising rates or maybe back off the gas a little bit? Short duration is definitely worth considering for your fixed income allocations. Okay, and now looking at the most popular econ data pages from the month of July. At the top of the list, still the U.S. retail gas price. We are off the high slightly there, but definitely elevated from a year ago. And then a lot of Treasury rate indicators, as to be expected with the recent Fed activity. Will they continue raising rates? Will they not? We see everything from the 3-month Treasury bill rate out to the 10-year rate, also the 10 to 2-year yield spread, which is where we are going to be taking a bit of a closer look here. And also adding in on the bottom panel in orange is the 10-year to 3-month Treasury yield spread. Now these two yield spreads are most common for predicting U.S. recessions, and our chart shows that they tend to invert or dip negative preceding those U.S. recessions in gray. Right now, the 10 to 2 spread is negative, and the 10-year to 3-month spread is nearly so. As we've entered that technical recession, 2 quarters of negative GDP growth, people are looking at these spreads to confirm if a full-on U.S. recession is coming down the pipe. Turning now to the hottest econ data pages, again, the most month-over-month page view growth. Some sobering data points here to take a look at. All popular as of late are the U.S. auto loans delinquent by 90 days or more. We also see the U.S. Misery Index. We also have U.S. coronavirus deaths per day, receiving some more interest than last month here in July. And one data point that we're going to take a closer look at, the U.S. crude oil in strategic petroleum reserve stocks. And this, as you might commonly hear, strategic oil reserves, it being called, is that purple line on our chart, declining very rapidly this year, versus in orange, the U.S. retail gas price. So as gas prices have ticked higher, the U.S. has been forced to tap into this reserve. It peaked in about 2010, 2011. What we're seeing here, about 475 million barrels in the strategic reserve, the lowest level going back to 1985. Definitely something to think about while you're paying out the nose at the pump. That's it for another What's Trending on YCharts. Our top stories from July were Shopify stock price cratering as shoppers return to brick and mortars. We also looked at short duration fixed income funds, which might be worth considering if you expect rates to continue rising. And finally, we ended off with that picture of the U.S. Strategic Oil Reserve down to levels we haven't seen since 1985 as gas prices remain high. Don't forget to hit subscribe below, and we'll see you next time for another What's Trending on YCharts.